Welcome to the Phuble podcast, the podcast where we talk about all financial markets around the world. I am Philemon Viennas, and this podcast is sponsored by Phuble, the social networking platform for any and all investors. This week, I am in London, so I am going to be discussing just a quick BREXIT edition of the Phuble podcast. Just a quick update on what's happening. The Supreme Court this week is now deciding whether Boris Johnson's decision to prorogue Parliament until the Queen's speech on October 14th is unlawful or not. Just a quick overview of what's been happening with the financial market here in the UK and the major stock exchange, the London Stock Exchange. The FTSE, which is the Financial Times Stock Exchange, which tracks the largest companies here in London on the London Stock Exchange, has been relatively flat across all market caps. So there are four major indices to look at here in London, and those are the FTSE 100, the FTSE 250, the FTSE 300, and the FTSE small cap. The FTSE 350, I think, is the best indicator. That is a combined measure of the FTSE 100 and the FTSE 250. All these indices are weighted. Over the past year, they've all been relatively stagnant but have a positive uptrend, which is actually quite shocking considering what's happening here with Brexit. The FTSE 100 finished the week last week at 7,344 GBP. The FTSE 250 finished at 20,169 GBP. The FTSE small cap indice finished the week at 5,526. All of these indices that I mentioned are based on market cap and are all weighted. The yields of the UK government bonds, which are referred to as the Gilt Bonds, have all been declining the past year. The only inversion that is currently occurring is between the 2-year and the 5-year bonds. The 2 years at 0.52%, the 5 years at 0.46%, the 10 years at 0.62%, and the 30 years at 1.05%. Since January, all of the UK bond yields have been declining, and that is most likely due to uncertainty in the financial market because of Brexit. Like I mentioned before with the US, whenever there's uncertainty in the market, investors typically in a secure environment go out of stocks and into bonds. People are still in stocks, but probably not fully invested. So the FTSE indices are increasing, but there is also an increase of cash flow in bonds because there is uncertainty with Brexit. If Brexit happens with a no deal, which has a more likelihood of happening if the Supreme Court here in Britain rules that it was lawful for Boris Johnson to actually prorogue Parliament, the gilt yields will probably still continue to decline in the coming weeks, and an inversion will happen. The FTSE indices will also most likely decline on that news, since investors will move out of stocks and most likely into bonds or overseas somewhere like the US market. Brexit not only affects the UK financial markets, but also foreign markets. If Brexit were to happen without a deal, money would most likely flow out of Britain and into the US because it would be seen as a more secure environment to place cash. Brexit is not going to get settled within the next 1 month, 2 months, 3 months. I think there will be a delay. I think bond yields are going to continue to decline, and I think the FTSE indices will remain relatively stagnant. There has been that, I find, strange move with the small cap index that has continued that upward trend this year. And I say that because most of the time when uncertainty occurs in the market, investors go away from risky investments, and small cap indices are seen as riskier investments. But that may also be because investors are sort of immune to this whole Brexit process. But once again, if the Supreme Court does rule that Boris Johnson's decision was legal, then there's going to be a fear in the market that a no-deal Brexit from the EU, which means that there are absolutely no deals with the EU after Britain leaves, increasing the uncertainty with the economic state of the UK, has a higher chance of happening than if they rule that it was unlawful for Boris Johnson to actually suspend Parliament. If they rule that it was unlawful for Boris Johnson to actually suspend Parliament, he will most likely be forced to resign, and Parliament will then proceed with suspending Brexit even farther down the line, giving more time to make a deal with the EU or possibly even a second vote on the subject matter. That's all from London. Thank you for watching the Phuble podcast, and happy investing.